Reports have revealed some surprising news from Tesla. The company has exceeded expectations by ramping up production at an astonishing rate. They've managed to reach a staggering 5,000 Model Ys per week, which is equivalent to about 250,000 vehicles per year. It's truly impressive that it took them 108 days to go from 4,000 to 5,000 units. Many skeptics never anticipated such swift progress. And what's even more remarkable is that Tesla's numbers continue to improve despite the high inventory. Analysts predict that the prices of the model will rise, possibly leading to a backlog. However, it's remarkable how quickly the inventory for Model Y is decreasing. Remember, Tesla focuses solely on producing the Model Y and will soon start manufacturing the Cybertruck. This production increase is likely a result of the successful ramp-up of the 4,680 batteries, which is fantastic news if it's true. Although this news may seem negative, experts actually believe it's not a cause for concern. Tesla China has previously denied rumors that turned out to be true, so even though they denied starting production of a refreshed Model 3 at Gig High in June, it's worth keeping an eye on. We all want Tesla to be flawless, but they initially denied the reports about price cuts on September 30th. However, what unfolded just 3 weeks later? Price cuts were introduced, despite their early denial. Then let's recall what happened in December. There was a temporary suspension of production in Shanghai by Tesla China. It's not worth noting that this had something to do with Christmas, as it is not celebrated there. Keep in mind that Tesla China operates somewhat independently. Experts don't suggest that you can trust Tesla, but they skeptically approach anything from Tesla China until it's confirmed. And it's understandable why Tesla China would deny rumors considering the Osborne effect. By dismissing the speculation, they avoid impacting their sales negatively, so it's not necessarily wrong for them to do so, but experts don't give much weight to such statements. In addition, regular customers who aren't familiar with Tesla's history may have a different perspective on this. Morgan Stanley has some interesting insights about Tesla. Why isn't Tesla mentioning the IRA, the $7,500 government tax credit that benefits Tesla, as many auto analysts believes that any incentive, even a small one, can boost the entire EV industry. However, Morgan Stanley disagrees. While it may benefit everyone if the waves are massive and other automakers have small boats, Tesla's huge ship remains unaffected by these waves. The government will provide a significant amount of money, like an ocean of funds, rather than just a river. According to Morgan Stanley, Tesla can take advantage of the IRA benefits more than its competitors, passing them on to consumers and increasing market share rather than focusing on profit margins. This aligns with the government's goal of making EVs more affordable for consumers than gasoline vehicles, which will eventually become a reality, though it may take some time. Interestingly, in Tesla's first quarter transcript, there is no mention of the IRA or the Inflation Reduction Act. This omission is intriguing because the IRA is highly significant for Tesla. In the EV industry, Tesla is expected to be the biggest beneficiary of the IRA, both in terms of absolute dollars and relative to its competitors. Tesla has utilized its vertically integrated business model, technological advancements, and manufacturing expertise to establish cost leadership and previously enjoyed high margins. However, with the implementation of the US Inflation Reduction Act, which provides substantial tax credits and a significant amount of money per kilowatt hour, Tesla's leadership position has solidified and the gap between Tesla and its competition has widened. Experts believe that the IRA is extremely advantageous for Tesla, providing them with absolute financial benefits compared to traditional automakers. It serves as an insurance policy that many investors are currently overlooking. Tesla is focused on producing fewer models to ensure quality over quantity. This strategy allows them to lower the production costs for these vehicles. Competing with Tesla can be challenging for other companies, especially when they're still working on early prototypes without the advantage of Tesla's large-scale production. For example, Lucid Motors sell its vehicles at an average price of $106,000, while Ford's electric vehicles cost around $100,000 to produce and are sold at an average price of $50,000. This cost discrepancy is why some believe Lucid is performing better than Ford. Rivian, on the other hand, has a slightly better average selling price of $83,000, but still incurs a lot of loss of $180,000 per car sold. Despite this, Rivian stock experienced a 6% increase in after-hours trading after reporting a narrower quarterly loss than expected. However, such losses indicate that the company may face difficulties in the long term. Morgan Stanley predicts that Tesla could benefit from tax credits related to advanced manufacturing production, potentially accounting for up to 45% of its earnings in 2023. These credits are specifically for manufacturing batteries within the USA and are received by the manufacturer rather than the consumer. In comparison, GM and Ford only receive credits accounting to 3% and 6% of their earnings respectively. Morgan Stanley suggests that this advantage could lead legacy automakers to reconsider their capital expenditures on unprofitable electric vehicles, potentially slowing down their transition and increasing the risk of bankruptcy. Tesla continues to compete with Volkswagen in Norway, where it's close to surpassing them in terms of market share. Interestingly, Jerome Powell, the Federal Reserve Chair, currently has the lowest approval rating among all Fed chairs since surveys began in 2001. Surprisingly, 36% of Americans still trust Powell's ability to manage the US economy effectively. Having faith in the government's ability to mess things up prepares one for potential surprises when they do manage to get it right. Recent data from China confirms that Tesla is on track to achieve a record-breaking quarter there. Additionally, the expansion of superchargers in Canada is great news for Canadian Tesla enthusiasts. Tesla Korea has introduced touchless test drive events, allowing people to experience driving a Tesla for free for up to an hour. This improvement is particularly welcome, as previously test drives were limited to 15 minutes within city limits, hindering highway testing. Increased production in Texas brings even more excitement as it eliminates the need for shipping vehicles from the US to Canada. This shift reduces inventory pressure and improves availability, particularly for the Model Y. However, it's important to wait until the ship carrying Model Ys from China arrives in Canada before celebrating this achievement fully. On a positive note, more police departments are replacing their fleets with Teslas, highlighting the company's growing influence. Tesla released a video showcasing the affordability of their vehicles in China, comparing the Model 3 with Audi, BMW, and Mercedes-Benz models. The video emphasizes the additional features Tesla offers. Meanwhile, Nikola Corporation faces challenges with plans to pause truck production due to significant quarterly losses. Tesla is also facing political pressure, but the allegations of hiding complaints don't seem to carry much weight. So do you think Tesla will soon dominate the entire EV industry, and would you be happy to invest in it? Let us know in the comment section down below. And that's it for this video. Don't forget to express your gratitude by clicking on the like button, following our channel, and turning on notifications to stay updated and won't miss any of our future posts. See you next time.